All right, everybody, welcome back to another episode of the Discovering Multifamily Podcast. I'm one of your hosts, Anthony Scandariato with Red Knight Properties. And today we're going to talk to Stephen Lerner. And Stephen is the founder of Early Bird, which is a free daily email newsletter featuring commentary about latest trends in stocks, cryptocurrency. We talk about real estate cryptocurrency as well. Not many people know what that is. In both the private market and the public market. And it's it's basically designed to help individual and non-professional investors stay on top of all the investing news that is important today. He's got a podcast as well. He's been, creating content for Early Bird since 2017. He's written numerous articles about different topics. And today we're going to kind of talk about general 2022 outlook. Some of it is going to be real estate related, some of it not. But really excited to have him on the show. He's got a wealth of knowledge, and thanks for coming on, Stephen.
Hey, thank you so much. I really do appreciate it and glad to be here.
Excellent. Well, we're happy to have you here. So what's kind of your, looking back on 2021, we had it was a pretty crazy year, right? So we had a lot of different things happen in terms of, investment vehicles. So we talk about cryptocurrency, being, a new investment vehicle for a lot of mostly retail investors. Now we kind of saw some institutional investments being made into cryptocurrency. Obviously, it's a big year for real estate investors as well, commercial real estate investors and multifamily, 1 to 4 unit homes. And what do you think the outlook is for 2022? We have some new asset classes like NFTs. I don't know much about it, but I keep hearing it. It's like a buzzword, kind of similar to when Bitcoin came out. Do you kind of see these asset classes continuing on an upward trajectory into 2022? And, if so, why? And what do you think's happening in the economy?
Yeah, thank you. So I think for the past few years, certainly since the pandemic started, we have seen an influx of new retail investors participating in the market across all of these different assets that you've mentioned, everything from stocks to cryptocurrency and real estate and so many other different types of assets. You mentioned NFTs. And I think the box is sort of open now. And we've seen so much participation over the past 2-3 years that we're going to continue to see that trend in 2022. Especially, I think a lot of retail investors are getting uncomfortable with some of the economic trends they've seen in terms of inflation. They want to get a better bang for their buck, so to speak. And so my understanding, talking to retail investors, is that they're going to be definitely focusing not just on traditional investments such as the stock market, but there's going to be a lot more attention focused on private market stuff as well, including real estate. Investors just want to get, the best interest that they possibly can.
Right. And when you talk about investors shifting to, more of the private markets, that obviously they have to be a little bit more liquid than usual, because in the public markets, you can kind of trade in and trade out at any time. Some of these private investments, like real estate, for example, you can't just trade in and trade out one day to the other. And you can't really check a ticker to see, how your investment is doing. It's a little bit more longer term, sometimes shorter term, but not talking day to day. So do you see liquidity still being pretty active in 2022? Like, do consumers have more liquidity than ever due to some of the issues we've had in 2020 and 2021? And do you see more people kind of pulling back from, whether it's the Dow or the S&P or, even some individual stocks that they're holding? They think it's kind of a bubble, but we've been saying that for 20 years now. So what do you think?
Yeah, I mean, I think you definitely, you hit the nail right on the head. Consumers have higher savings than almost ever before. And especially with inflation being the way it is, they're definitely looking for ways to have the best possible investment. I still think traditional stocks are going to be the way to go for many of these retail investors, but they're going to explore more private investment opportunities as well, everything from equity crowdfunding to cryptocurrency and real estate as well. I think to your point, the issue of liquidity will be something that retail investors have to get used to. It's not like the stock market where you can just sell at any time. It's not like a traditional savings account, which might be protected by the federal government. You're dealing with a lot of investments in the private markets where if you invest in it, you're going to have to wait several years till you actually cash out. I've done that for a few years ago, including with a few REITs. And I think a lot of retail investors who are now exploring those opportunities are going to have to be getting more comfortable with that concept of not having cash from your investments for the next few years. So it'll be a transition, but I think it's one that some retail investors will be making.
Right. And is the illiquid investments really, more safe than investing in the public markets? What do you think?
Yeah, I think there's certainly going to be different levels of risk when you're dealing with certain types of investments, cryptocurrencies. For example, the recommendation is these are always, a small portion of one's portfolio. They're a bit more riskier. I think it certainly depends on the investor. I always say consult with the financial advisor. I do think because of the risk attached with some of these types of investments, retail investors should be cautious. Some may learn lessons the hard way, unfortunately, but I think, being cautious is certainly a good idea.
And so what are some of the things you've seen with monetary policy in 2021, moving into 2022? We were chatting a little bit before, and how, home prices are basically at an all-time high. Is that going to continue into 2022? Or are we going to see kind of a little bit of slowdown? That's my opinion, just a little bit of slowdown. I don't think we're going to see a recession, but what do you think on the home front side? And obviously that does affect supply and demand dynamics for multifamily as well. So what do you think in general? Some of the moves that the Fed has made to, whether it's a good thing or bad thing, to, I guess, help stimulate the economy in different ways.
Yeah, so I think first to your first point about home prices and where the market's heading. Zillow predicts that over the next 12 months, home prices in the US will rise about 11% overall. So the market's going to be heading in that direction. So that's going to be a big reason why a lot of investors will be looking at the real estate market over the course of 2022. As far as the Fed's concerned, as you know, the tapering process is beginning. They just started that, and they're going to be probably increasing that over the next few weeks and months ahead in terms of tapering. Interest rates might increase in the second half of the year. And I think what that will do is sort of kind of change the dynamic of the market. Right now, there are a lot of so-called bubbles, whether it's tech stocks or cryptocurrencies, even into real estate. And so I think it will certainly change the dynamics of the market, because once you start seeing interest rates go up, it's going to affect everything. It'll affect the way that a lot of businesses conduct business. It'll impact the real estate industry, definitely, because of mortgages and whatnot. So I think it's going to have a big impact, assuming the Fed actually does increase interest rates in the second half of next year.
So then if they do that, what does 2023 look like? Is it kind of back to normal, 2019 type of rates? What do you think?
I don't think they're going to be quite there yet. I think it'll take at least, my opinion, maybe 2 years or so to get back to those 2019 pre-pandemic type of rates. But I think it'll be headed in that direction, depending on what's going on with inflation, depending on what's happening with the pandemic. If there are any more lockdowns, for example, then you're going to see unemployment go up, and that might change the Fed's tapering timeline. And it might push out the interest rate projected increases from 2022 to 2023. So I think it really depends how things play out. Right now, I think it'll be closer to 2019 and 2023 in terms of the rates, but it depends what plays out over the next year.
For sure. And so what type of investments is your group focused on moving forward to kind of hedge the inflation risk, obviously the interest rate risk that you're talking about, some of the the lockdown risks, with some industries potentially locking down again. I don't see that, but we'll see. What are some asset classes that you're advising?
Yeah, I don't really. So with my daily newsletter at earlybird.email, it's 3 minutes, and we kind of go through the whole market. And I want to be able to sort of, what we've done with the newsletter is to advise retail investors. Here's what's going on in the market. Let's take a look at this particular investment. Here are the pros, why you should invest. Here's a bullish case, and then here's a bearish case as well. And we want to empower investors to make their own decisions. I think in terms of retail investors, what's definitely interesting them, it's definitely still big tech. It's definitely cryptocurrency. And it's some of those meme stocks, some of those stocks that did very well during the pandemic, as well as a lot of the reopening plays. And so that's sort of what I've seen retail investors gravitating towards. It's what I've been writing up. I think depending on how the pandemic shapes up in 2022, some of those reopening stocks and travel and hospitality, I think could be good bets. But if we go back into a lockdown scenario, then we're looking at the Zooms and the Pelotons of the world, and we're looking at the stocks that did very well during 2020, which those stocks had a very bad 2021. So maybe they'll recover if there are more lockdowns, but if there aren't, then I would say travel and hospitality stocks. I also look at some of the big tech trends. Metaverse, I think a lot of people finally learned about it in 2021, and I could see that being a trend that kind of more investors gravitate towards in 2022, as well as other type of trends. Buy now, pay later has been another big trend in the financial market, and a lot of investors seem to be interested in it. I don't know if that's a bubble or not. I'd say that's sort of an area that you need to take a look at more, but I wouldn't, I definitely would do my homework on that first. So I think these are some of the big overall trends that we kind of look at in the new year, and that investors are gravitating towards.
And in addition to your newsletter, you also run a podcast, correct?
Yeah, a podcast called Early Bird. So the newsletter, it's 3 minutes every day, quick hit. Here's what you need to know going on that day. And then each week there's a 20-minute episode where we take a deep dive into a different investing topic. So it's sort of, we have the quick hit stuff, and then we have the longer conversational stuff as well.
Awesome. And how can my audience find you, Stephen? What's the best way?
Best way is the website earlybird.email. You can sign up for free to the email newsletter.
Excellent. And what we'll do is we'll have a link to earlybird.email in our iTunes description, as well as our social media platforms. We'll also have a link to Stephen's LinkedIn page and a couple of other websites that he hosts his content on. So definitely encourage you to connect with him. And if you liked what you heard and or saw today, please give us a rating and review on iTunes. It helps Stephen and I get our message out to a greater audience, and we really appreciate it. But hope to have you on again soon for next year, and take care.
Thank you so much. I appreciate it.